What's good, everyone? Today I'm breaking down the 9 a.m. model, what I believe is the most important narrative based model that you need to master. Without this, you're basically trading blind. If you ever felt like the market is moving against you for no reason, this might be the missing piece. Let's get into it. Before we get into it, I want to go over the basics first. Market profiles, key levels, liquidity pool, and time. These are the basics. Market profiles is when knowing where price is going towards, your bias, your dollar, where the weekly candle is going towards, which day of the week you are in, which week of the month you are in, and you need to know all this before trading the 9 a model, and also knowing which session profile you are in, what London did, what did Asia do, what did London do, what did 8:30 news do. All these are important to know before trading the 9 a model. And before I start the video, this is purely a narrative based model. I'm not going to be talking about any entry models. You can take any entry model you need. It could be a model 1 OBFEG breaker, IFEG, my meta entry, anything, unicorn, any entry of your choice is fine, because this is basically just a narrative based model, right? All my models are based on narrative, so this is one of these models. So market profiles, key levels are extremely important, right? Every high or low of the day gets created at a key level, and it would be in an hourly key level or time frame above it. It could be the 4 hour, daily, weekly, even the monthly. And thirdly, liquidity pools. Liquidity pools are more important than the key level, whether it was a previous high or a low, or a session high or a low, or whether it was a daily or a weekly high or a low, even a resting high or a low inside the key level. Or it could even be an engineered high or a low, or what I like to call early participants as well. Whenever these highs or lows gets turtle souped, so these are early participants as well. Whenever these traders get stopped out, price takes liquidity from them and go higher. So these liquidity pools will tell you where price is likely to head. If we are bearish and we pop above the high, we could turtle soup that high and go lower. And if we are bullish, we could go below a low, and if the market profiles are still bullish, we would go higher if the bias and if the dollar and if everything is aligned. So price and time. So you all know that price only does one of these four things. It could consolidate, could expand, it could retrace, or it can reverse. However, when it comes to the 9 a model, it will only do one of these three things. Why 9:30 and not 9? It's because 9:30 is when the futures markets open, and that's when large amounts of liquidity gets injected, and we will see huge price fluctuations. And it's always crucial to always wait till 9:30 and not to enter before 9:30. Sometimes the setup will look good, and you'll see a setup forming at around 9:15, but it's always crucial to wait till 9:30. So the 9 a model will only do one of these three things. It would either manipulate, retrace, or expand. It can manipulate at 9:30, and it can expand at around the same time as well. Or sometimes it could manipulate at 9:30 and distribute at 10. I'll go a bit more in depth about it in a bit. When to avoid trading the 9 a model. You need to know when to avoid it as well. So these are the days that I like to avoid. So on a Monday with news, normally on a normal Monday without news, I would try to take a New York reversal for the day. However, when there's news at 10, most of the time there will be news at 10 on Mondays. So when there's news at 10, I would actually avoid it because price will be really sloppy. So I would avoid these kind of days. And after large expansion in London, and if there's news at 10 a.m. So if London expanded and if there's news at 10 a.m., I would avoid it. So price will be sloppy from 9:30 to around 10 until at least news drops. Or if you have been trending since Asia and Asia created a high or low of the day, right? So let's say Asia creates the low of the day and we have been trending, and also if there's news. So let's say we have been trending since Asia, right? We have been going higher since Asia and we have news at 10 a.m. And if you have news at 10 a.m., I would avoid trading 9:30 because we have been expanding since Asia. So clearly by now you guys should understand that 9 a.m. model is simply trading the 9:30 open. So there are three main types of 9 a.m. models that I'll be talking about today: the 9 a.m. high low of day, 9 a.m. distribution, and 9 a.m. retracement. There are three main types of 9 a.m. models that I'll be talking about today. Firstly, when the 9 a.m. creates the low or the high of the day, or when London or any other key time creates the low of the high of the day and I expect 9:30 to distribute, or when I expect 9:30 to retrace back into OTE. So I'm not trading the OTE, I'm trading the retracement into it. So 9 a.m. high or low day, there are three primary ways this could unfold as well. When 9:30 manipulate and distribute, offset macro, London take profit taking macro, and when 9:30 manipulates and 10 a.m. distributes. So 9:30 manipulate and distribute. This is easily my favorite 9 a.m. model trade because this will give you the best and the highest probable trades. Before getting into the markets, obviously you need to have a bias and a clear understanding of where the market is heading towards. So once you are done profiling the market, you can mark out your high probable key levels, right? And in here, this was a Tuesday as well. Tuesdays are highly likely to create the high or the low of the week. And Tuesdays are my favorite days to trade the 9 a.m. model as well. First, look at Asia. What did Asia do? Then look at what London did. On days like this, on days where I want 9 a.m. to create the high or the low of the day, whenever I say 9 a.m. is always 9:30. Right? Whenever I say 9 a.m. is always 9:30, and 9 a.m. is just the hourly candle that I'm trading. But I will always wait till 9:30. So, firstly, look at what Asia did. Did Asia trend or did Asia range? On a day where I want to catch the high of the day at 9 a.m., I want Asia to range inside and even London to range as well. Or Asia and London both to trend slowly into my key level. Like I said before, it is extremely important to wait till 9:30 to trade the 9 a.m. model. Any other high or low that gets formed prior to 9:30 is low probable. And once the high or the low gets formed at around 9:30 or after 9:30, you can enter with any entry model. It could be a Model 1 OBFVG, break, a unicorn, my meta entry, whatever it is. Right? At 9:30, I want speed. Speed into my key level and out of my key level. That's the real source. Speed in and speed out. That's how you know you time the market well. The market makers will get you there and out of there so fast that it will look so high inside and impossible to enter once the move has already been done. However, that's how you know you timed the market well, or that's how you know that was a good trade. So next is offset macro and London profit taking macro. This is when the high or the low of the day gets created after 9:45 but before 10. Right? So it gets after 9:45 and before 10 we reverse and we would manipulate and reverse and 10 a.m. would distribute. So this is when London expands and London traders starts taking profits. Normally this occurs after 9:45. So London will expand it could be from Asia or it could be from London Open. We would see expansion towards your key level and London traders will be in their longs, and even at 9:30 you will see expansion into your key level. Right? All these London traders are in longs and they're in profit. But after 9:45, they will close their longs and they will start taking profit. That's why it's called London profit taking macro. And after 9:45, you will start reversing. You probably have seen a million times where at 9:50 or even at 9:45, price starts reversing. It's when the offset macro is in play. And London traders will close their longs or shorts. In this case, it's longs, and price will start reversing. So these are the days that you can catch the 9:45, or even if you miss the 9 a.m. model, you know that this is the high of the day just because of the narrative, the offset macro, right? These are the days that the silver bullet works so well at 10 a.m. So you know, even if you miss this, you can enter after 10 on a silver bullet trade. So you can clearly see in here the important thing is that the low of day is at a random time, not at a proper key level, not at a key time. It was in Asia, not on a key level. So once you start seeing that, you can expect the day to be bearish if the higher time frame order flow is bearish as well. So this clearly is a red sign for me to take longs off of, because we have a low of day at a random time at a random price level. And the third way, 9:30 to manipulate and 10 a.m. to distribute, is when 9:30 manipulates like in here, but we have news at 10 a.m. so we will not distribute until 10. So you'll have to wait till 10 a.m. news to drop, and we might see a scary failure swing or tapping into another key level, and we could go lower. Right? That's what the third 9:30 to manipulate 10 a.m. to distribute is. So 9 a.m. distribution. 9 a.m. distribution is pretty simple as well. It's when the low of the day or the high of the day is already created at a key time on a key level. Right? In here the key time is 3 a.m. 3 a.m. is highly likely to create the high or low of the day as well. So if we create the high or the low of the day at 3 a.m., we would see distributions at 9:30, depending on when we are at price. So you can see London taps into your key level, and we keep on going lower, turtle soup here, and at 9:30 we would go tap into a key level and we would go lower. And in here, one tap is more than enough because this is a continuation trade, because the high has already been formed. 9 a.m. distribution days are relatively easy to trade once you plan out the higher time frame key level in advance. So I would look for key levels on the 15-minute time frame or higher. At least there should be a proper clean key level on at least the 15-minute with the protected high or protected low for my stop, which is this in this case. So the last one is the 9 a.m. retracement model. This is not my favorite model to trade, but this is also so important to know, because once you have an idea on this, you can get an idea for the rest of the day to know where price is heading towards. 9 a.m. retracement is a counter trend trade, knowing that we are trading against the order flow. So in here, the order flow is clearly bullish, but we are taking shorts, right? It's against our bias, but trading into your key level rather than trading out of your key level. So this is the key level. We have a key level in here. We are trading into it. In here, we are bullish for the day, but we had sell stops below this range, and we were in a deep premium as well. So there's no need for me to take longs off of in here, right? We are in a deep premium. I want price to come back to these lows, tap into the key level, tapping into the sell stops as well, and rebalancing all this price action. This is a counter trend play, so obviously it's low probable. Like I said before, even for any of these models, you can take any entry you want, right? So if you go to a lower time frame, you will see a breaker, OB, FVG, everything in here. So there was a high here as well. We took that high, and even though we should get an OTE, we are trading into the OTE. We are not trading the OTE, but we are trading into it. So we get a turtle soup in here, and then price goes higher. Knowing this is important, because let's say even though the day is bullish, you had a bearish bias. Once you see this, you can at least take your partial, so close your trade in here. This is why the narrative models are so important. You know when and where to take your trades, take your profits, take your partials, knowing when to enter on the distribution, knowing when to wait for manipulation. All these are important. That's why 9 a.m. model is so key. Without knowing this, it's almost impossible to trade NQ or even FX or any other asset that you're trading. So that's pretty much the end of the video. And if you guys want more narrative based models from me or any other model from me, just comment down below and I'll make more videos on it. See you guys.